Welcome back to the Successful Farming Podcast. In today's episode, host Lorrie Boyer talks with Dr. Michael Langemeier, professor of agricultural economics at Purdue University, about the most important shifts in farm management thinking, focusing on bushels per acre to cost per bushel. Today's episode is brought to you by Nutrient Economics.
Everyone has questions about their farm. From general inquiries to in-depth fertilizer questions, it can be hard to find straightforward answers, let alone ones that apply to your operation. That's exactly why economics was created. Our team sifts through the endless stream of agronomic information so you don't have to, providing relevant answers, one-of-a-kind tools, and easy-to-implement advice all in one place. Find your answers at nutrient-economics.com.
On today's show, I welcome in Dr. Michael Langemeier. He is a professor of agricultural economics with Purdue University. And our topic today is shifting the mindset, focus on cost per bushel versus bushel per acre. And we will go into depth on this topic. But first, let's get to know more about you and your background, Michael.
I graduated with a PhD at Purdue in 1990. I'm originally from a farm in Nebraska, and my brother and nephew farm about 60 miles northwest of Omaha. So they're still operating that farm. And then from 1990 to 2012 at Kansas State University, primarily in farm management, agriculture, finance, and primarily in outreach appointment, but I've also taught over the years and, of course, done research in farm management. And then 2012, I had an opportunity to come work for the Center for Commercial Agriculture at Purdue, and I pursued that and have been here ever since, doing some very similar things I did at Kansas State, again, focusing on agriculture, finance, and farm management. And majority of my appointment is in extension.
Michael, the topic today is shifting the mindset, focusing on cost per bushel versus bushel per acre.
Okay. Well, first of all, we have a spreadsheet here, and a lot of universities do, where they have cost budgets. And our spreadsheet actually illustrates both per acre and per bushel. The per bushel is really important if you're thinking about making changes in your fertilizer program, your seeding rate, maybe changing the herbicides or insecticides that you're using. When you're doing that, it's really important to do that per bushel because you really want to always measure the benefits and the costs. And when you're measuring the benefits, you want to make sure that yield is in there. That's a very important component, and that tends to be more of a per bushel estimate. You're basing the decision on what's happening to bushels rather than what's happening necessarily in terms of per acre. So that's the critical thing. You could do a specific example. Let's say someone's putting on 200 pounds of nitrogen, and they look at a tool, and Iowa State has a tool, for example, that looks at different optimal fertilizer levels based on fertilizer price, corn price. And let's say they look at that tool and they say, well, maybe I should put on 180 pounds. And so they want to evaluate that decision going from 200 pounds to 180 pounds, based on benefit and cost. Obviously, you have some cost savings there, so that's a benefit because you're putting on less nitrogen. But what's the impact on yield? If the impact on yield is too big, then you're not going to make that switch. If the impact on yield is really minor, which it sometimes is in fertilizer decisions, the curve is fairly flat. That yield fertilizer curve is relatively flat once you get up close to the top of the yield curve. It looks like it's not going to reduce corn yield very much. Then the benefits are going to outweigh the costs, and you go ahead and make the decision. The same with all decisions. Let's do another example. Let's say you were currently using 35,000 seeds per acre for your corn, and you want to evaluate whether you should be doing 32,000. It's the same idea. How much am I saving in terms of the seed corn cost? What's my impact on yield? A lot of times the impact in terms of reduction of cost. You know that for sure, but you're not necessarily 100% certain what the yield impact is, even though there's information, research out there that can help you with that. You do what if. I always encourage people to say, how much difference in yield would it need to be for that to be a break-even situation? Is that 2 bushel? Is that 3 bushel? What is it? And if it's relatively small, again, the benefits are going to outweigh the cost, and you go ahead and do it. And so that's why I kind of like the per bushel. It focuses on the fact when we're making these decisions on direct costs, fertilizer, seed, pesticides, these kinds of costs, we're making sure that we're understanding what is the impact on yield.
Michael, when it comes to evaluating a cost per bushel versus cost per acre, what about buying versus renting land?
Oh, that's a really good one. The buying versus renting is a really tough decision. The renting is pretty clear cut in terms of what the cost per acre, and you can incorporate that into how that would impact your break even price. I always do those together. You kind of do what's the per acre return after if I cash rent some ground, and then I also look at what does that do to my break even price, which is the per bushel. And so I always think of those together. The purchasing is difficult because what some people want to look at, and you'll never buy any land, or you'll very seldom buy any land if you do this, is they say, well, I'm thinking about my land is going to cash flow. Land does not cash flow. Okay. The returns you're going to get from that purchased land are not going to be large enough to make the principal payments. If you're borrowing money on that ground, or if you're using your own equity, you're not going to get a good return on your equity by doing that. The reason is really simple. When you're buying land, you're buying two things. First of all, you're buying land so that you can get a net return per year for that land. Just like the landowner gets a cash rent, the person that's buying the land and farming themselves gets a net return to land. So you're buying land for that purpose, but it's more complicated than that because land appreciates over time. And so I always think of land as a dividend paying stock. I get a dividend in the form of cash rent or net return to land, but I also get appreciation over time. And that appreciation over time is larger than the cash rent and net return to land. And so when you're thinking about buying land, you have to be able to incorporate not only that net return to land, you've also got to think about appreciation. If I include both of those things, is this a good decision? Does it look like over a 20-year period, am I going to get enough net return and appreciation to make this a good investment?
What about when it comes to selecting inputs, Michael?
Yeah. Let's go to a chemical example. This gets a little more complicated. And the one that we get a lot of questions on always is fungicide. And there's a lot of research out there that talks about timing. I'm certainly not an expert on when the timing is, and so you need to take a look at that. And you need to go to the benefit cost again. You know what the cost is going to be. For example, with an airplane, with the chemical, it could be $25 to $30 per acre, for example. You can put that on a per bushel basis if you want. The next thing to think about is how much benefit and yield on average am I going to get if I apply this fungicide? And that's where that research has been done by universities and also companies comes in handy. How many bushels is that? And based on that decision, is this a good decision? The other thing you have to think about with fungicide is should you do it once or should you do it twice? Now, this year, because there was quite a bit of southern rust, you probably heard that, all over the Corn Belt. But there's also, in Indiana here, we always have a lot of tar spot. It wasn't quite as bad this year, but there's also other diseases besides southern rust that impact corn. And so a lot of people are putting fungicide on. In previous years, some people were putting on two. Well, the decision is not quite so easy to make because corn price is lower. And so you have to have a larger benefit on the yield side when your corn's $4 versus $6. And so that's where that benefit and cost comes in. It's not only bushels, but it's what is that corn worth? With that information, you can decide, should I just apply fungicide once? What's the timing should be if I'm just doing it once? Or should I do it twice? Once a little earlier, and then skip 2-3 weeks and then do it again.
And what about corn versus soybeans?
I was hoping you'd ask that question.
Oh, well, good.
It's usually simpler than it's going to be this next year. And the reason why I say that, if you go back to last spring, the market was clearly indicating that it wanted more corn. I look at a couple things, but one of the things I look at is the soybean to corn ratio. And the soybean to corn ratio is about 2.4 historically. And this spring, it was low. It was 2.1, 2.2. And so I wasn't surprised that there was some continuous corn in the Western Corn Belt. We don't have much continuous corn in Indiana, and Ohio doesn't either. Illinois had more continuous corn. Certainly Iowa did, and Nebraska and Dakotas. But it was a clear signal. It's going to be complicated this spring because we have huge stocks of corn. And so you'd think, well, that probably means that we're going to grow more soybeans. The twist this spring is the outlook for exports on soybeans is so uncertain. And if we don't get some good export markets for those soybeans, i.e. China, if they don't start buying some soybeans not going to look very attractive, despite the fact that the stocks to use is relatively low. And so it's going to be more complicated than just using the soybean to corn price ratio. Right now, soybeans look pretty profitable. I think for 25, they probably are going to be, because we reduced the acreage so much that, at least in the Eastern Corn Belt here, soybeans are going to be more profitable than corn. Now, I probably a closer profitability, closer net returns between corn and soybeans in Iowa, because their corn yields are better than ours, and so are Illinois. But it's going to be difficult this upcoming year because of that uncertainty with the exports and then the huge pile of corn that we currently have.
Michael, you just talked about corn and soybeans, but doesn't wheat come into play?
In the Dakotas. Now, I get that question a lot, and I haven't really spent much time in the Dakotas, but I know some people up there, and I think that wheat's not going to be particularly attractive either, because we have large stocks to use of wheat. And then when you come to wheat, we're a minor player in the export market. And so if corn and soybeans looks at all profitable in the Dakotas and some places where spring wheat does compete, they're going to grow corn and soybeans. Like Kansas, for example. I haven't crunched the 26 budgets. I don't even know if they're out for Kansas yet. But my guess is, even with low corn and soybean prices, wheat's not going to look very attractive. One of the things that changed after the ethanol boom is the corn and soybean prices increased enough that wheat really lost acreage, and I just don't see that changing anytime soon. If it does change, it's going to be very minor adjustment. Historically, we've been doing 178 to 180 million acres of corn and soybeans. I don't see us moving off of that range.
Michael, I know you implied this, but I just want to make sure that I'm understanding. When you are compiling this information, it is done state by state, right?
State by state, and sometimes it varies within the state. I mean, I've spent all that time in Kansas. It makes a lot of difference if you're making this decision in northeast Kansas versus south central Kansas. It's just different in terms of the relative yields and relative prices. It's a little easier when you're in the Eastern Corn Belt here, because we can do very similar calculations in each region. And the only thing we have to vary really is the yields.
Yeah, that's a good point, because Kansas, Colorado, and even parts of Nebraska, well, and other states too, but just using these as examples.
And the Dakotas, they always have to see what the spring wheat looks like there, or they should at least. They should see how that compares to corn and soybeans. Also, of course, some people hesitate to move off of a rotation. We use corn and soybeans. It really has to be huge advantage to corn for us to grow continuous corn. We've had more soybeans than corn for the last 10 years. It hasn't been a lot more, but it's been more soybeans than corn for the last 10 years. And part of that is because we have about 300,000 acres of double crop soybeans down south. Southern Illinois would have even more. And so that brings our soybean acres up above the corn. We follow a corn-soybean rotation fairly regularly. It's the Western Corn Belt where you see these marginal changes. Iowa, Nebraska, and Dakotas, particularly with the spring wheat. But even Nebraska, you'll see this year, I was talking to my relatives this spring, and I could tell that there was going to be a lot of corn. That's what was on their mind. And sure enough, if you look at the ratio of corn to soybeans in Nebraska this year, it's about 2.2 this year. They planted a lot of continuous corn.
The marginal changes that you talked about, is that due to climate, soil types, things like that?
Yeah, it seems to me that if the spring is relatively open, there's a more likely chance for continuous corn if you have a good spring.
And of course, irrigation, that would also factor into the variability.
Oh, yeah. That's why Nebraska's 2-1. Because they have so much irrigation. Their non-irrigated ground would be much closer to a 50-50, but they still have more continuous corn on their dry land. And it all has to do with the relative corn and soybean yields compared to Iowa. When you get to the Western Corn Belt, Iowa and Nebraska, their corn yields are better than Indiana, for example, but the soybean yields usually aren't. And so soybeans are relatively more attractive here than they are in Nebraska. And another thing that's happening with soybeans is their basis is a lot weaker, particularly Nebraska. But the basis for soybeans in Indiana and Illinois, because we have so much crushing capacity, is really strong. So we have a good basis on soybeans. That also helps make soybeans more of an attractive crop in parts of Illinois and particularly Indiana.
The Dirt with me, Mike Howell. An economics podcast where I present the down and dirty agronomic science to help grow crops and bottom lines. Inspired by economics.com, farming's go-to informational resource, I'm here to break down the latest crop nutrition research, news, and issues, helping farmers make better business decisions through actionable insights. Let's dig in.
What about when it comes to growing season marketing decisions, Michael?
Yeah, when I look at marketing decisions, I usually think about what would be a good long-term strategy and then thinking about sticking to that. And what I'm talking about here is the importance of a marketing plan and discipline. If you have a plan, for example, where, even if you haven't used futures or hedging, but you have a plan where it makes sense for you to sell part of the crop in the fall and part of the crop in the spring because you're storing it. And typically the basis gets a little bit better, more attractive in the spring, because we know this fall there's going to be huge lines at the elevators. If any of that grain has to go off farm, it's going to be huge lines and there's going to be piles of corn on the ground. We know that's going to happen, and the basis is going to be weak. So if you have kind of a strategy that you've looked at over time, or maybe I sell a third of my crop at the harvest and then I sell 2/3 after the first year, and I kind of spread that out over 2 or 3 months, and that's worked pretty good for you, really, really be careful of modifying that or trying to outguess the market. That's one danger that people always have, is they say, well, I want to get the best price.
Right.
Well, when you start trying to outguess what the market's doing, you sometimes really get burned. And so if you're not going to use futures and options, the strategy there is to come up with a plan where you spread the sales out over time. That will give you at least the average price over the season, so you're not picking the low. So that's pretty simple without using sophisticated tools, but you'll be amazed how much risk protection you get from a simple plan like that.
Along those same lines, Michael, then what about post-harvest marketing decisions?
Yes, I think that goes along with your thinking about my marketing plan. And it's really common in the Corn Belt now to have on-farm storage. That really increases your flexibility and allows you to be able to store part of that corn and soybeans to the spring. And we've looked at marketing strategies over a long period of time. And certainly for soybeans, but for corn also, there's some real benefits of selling part of that crop, close to when you start planting. So holding part of that crop into March, April time period seems to work pretty good. Not holding the whole crop, but holding a portion seems to work pretty good because you get a better basis, and sometimes there's carry in the market. There probably is not a lot of carry this year on corn. The futures price is pretty flat, but usually there is. There's usually some kind of bump in the spring. Market's worried about how much corn we're going to get in the ground, this kind of thing. And so if you hold that, you can take advantage of that. And so use that on-farm storage. And if you don't have on-farm storage, this is probably not the year to be building it because there's not a lot of extra cash, but think long-term about maybe getting some on-farm storage because it really, really increases your marketing flexibility. Another thing is you're going to be so much more comfortable marketing your crop if you know your break even. It's hard this year because a lot of people have a break even of $5 and corn's below $4. So you're not going to get $5, okay? But it's still important to know that, because if you know that your break even's $5, it makes a lot of difference in your net returns if you sell for $3.50 or if you try to hold to get something at $4. That's where I think about using some on-farm storage to try to avoid the glut in corn marketing that's going to occur this fall, driving down that basis.
I can't help but think, Michael, too, what about machinery costs? How does that figure in?
Machinery costs have really increased since COVID. I've done some publications looking at benchmarking machinery costs, machinery investment. In fact, I'm revising those and going to put some Farm Doc articles together related to that topic. And so machinery cost and investment and labor are extremely important to calculate and compare to other farms. And the reason is those are two cost areas. They're not necessarily the largest cost areas, but I've found those two cost areas are the most variable among farms. We spend a lot of time on fertilizer and seed, and that's good because they're very, pricey inputs, but there's not a lot of difference in cost between those because we have so much information on seeding rates and fertilizer rates, and we've got all this history of tweaking. We've got that nailed for the most part in the Corn Belt on what is the happy medium there in terms of those rates. But the machinery cost is difficult because it depends so much on the size of the farm and the type of the farm and the type of machinery you buy. If you're a smaller farm, for example, they tend to have to buy used machinery to make it at all competitive. And usually the used machinery is older. And so you just really have to be cautious when you're making that machinery purchase. Is this the year I really need to make that purchase? And then what's the vintage? Smaller farms, like I said, usually buy used, but what's the difference in my farm buying 5-year-old or 10-year-old machinery? And is that 10-year-old machine going to last a while so that I can lower my cost by buying that 10-year-old machine? And I'm not saying these decisions are easy, but that you really have to spend a lot of time thinking about those decisions. Labor's the same way. Labor costs are much, much higher on smaller farms. And so as a farm gets larger, the labor costs per acre tend to be much lower. So the important thing there is to kind of compare your labor cost to the size of farm you have. I hate to sound like a broken record here, but I'm working on a Farm Doc article related to that topic.
What about when it comes to production abnormalities, Michael? Things like disease, pressure, drought, all those kinds of things.
Yeah, seed companies have events this time of year because they're wanting to sell seed in the fall here. And I went to one of these events, and it doesn't matter who the company was, but went to one of these events, and I thought they gave some very useful advice in terms of dealing with the current weather, the changes in weather that we're experiencing. One of the things they talked about is spreading out your planting window, using hybrids with different growing degree days, for example, different days, frost-free days required of the hybrid, but also just spreading that out in general, even if you weren't changing the hybrids that much. And what you're doing there is you're trying to prevent most of your crop maturing at the same time. Because think about corn, for example. If you hit the pollination window at the wrong time, it's hot and dry, your yield's going to be a lot lower. By spreading out that planting window a little bit, you're kind of reducing your risk. That's hard to do in today because our planters are so big that we can put in hundreds of acres in one day, and we can put in a lot of the crop in just a few days for some farms. But I think that's really important consideration. And I know the agronomists talk a lot about the fact that we're planting soybeans earlier, and so paying some attention to corn and soybean specialists in the state in terms of when they recommend the crops be planted. They usually have a planting date, kind of an ending date rather than an early date. But to the extent possible, even if you're trying to get everything in by May 15th, for example, try to spread that planting out a little bit at least, so you're not hitting the exact same days on pollination and your beans aren't producing pods on exactly the same day. I think that's good advice.
Michael, when it comes to benchmarking, what is your suggestion there?
That's kind of hard to do because usually the data is published after the fact. Think about FinBin, for example. They try to get that data out as fast as they possibly can. It's a really good source to benchmark. Their data starts trickling in April and May. You've already planted. You've already made your planting decisions by then. And so don't think of benchmarking as something that you're going to do once and I'm going to use that to make big decisions. Think about that as a very long run tool because that there's lags in that data. And so if you're going into 26, don't think you're going to get the 25 data, but you certainly could look at the last 5 years and say, okay, here's what my cost of production was. How do I compare? So you can make tweaks. It looks like my fertilizer is relatively high. Is there a reason for that? Is my ground more productive? Am I getting a better yield than what that FinBin average was getting? That would justify more fertilizer costs. And so, thinking through things like that. If my pesticide is really relatively high is another example. Why is that? Is it because I have some more resistant weeds and so I need to do pre-plant and post-plant and that's increasing my cost? I mean, try to provide some rationale for why your costs might be higher than the benchmarks.
Michael, is there anything else you want to add to our conversation here today?
In these times, agribusinesses really, really talk to producers about doing everything on a per bushel, and they're right. You don't want to just decrease cost. I don't want to just eliminate a fungicide. Well, I saved $25-$30. No, you didn't. If you took a big yield hit because you didn't put that fungicide on, that $25-$30 could be worth $50. And so you don't want to just necessarily eliminate certain cost items because you want to reduce costs. That's not the wise way to do this. The wise way to do that is to always think about, if I'm reducing this cost, is that going to reduce my yield? And I know the co-ops and others that are providing inputs are preaching that. Listen to them on that. They've got research. The universities have research on particularly these direct costs, herbicides, fertilizer, and seed. Take a look at that stuff. What is the sweet spot for fertilizer? What is the sweet spot for seed? And how much herbicide do I really need? It's always be thinking about that, but definitely be cautious of just trying to reduce costs for the sake of reducing costs. I think most producers don't do that, but we always have to talk about that when you have prices that are $1 below break even.
Certainly a wealth of knowledge in my guest here today. Thank you so much to Dr. Michael Langemeier, Professor of Agricultural Economics at Purdue University. I'm Lorrie Boyer for Successful Farming.
Thank you to our guest today, Dr. Michael Langemeier, for sharing your expertise. Also, thank you to today's sponsor, Nutrient Economics. For more information like this, please visit agriculture.com, and don't forget to subscribe, rate, and leave us a review. You can also follow Successful Farming on Facebook, Instagram, and Threads, and be sure to check out our other podcasts, 15 Minutes with the Farmer and Successful Farming Daily, wherever you get your podcasts.